Let's welcome in Ed Yardeni. He's president at Yardeni Research. He's joining us right now to take some questions. Ed, good to have you with us here. Good morning. Thanks very much for your time. I want to start with the broadening out of the U.S. Markets. I think we're in the early stages. I don't know if we can conclusively say it's happening, it's going to happen or not, but there are first signs. The Russell has been rallying for the last few days. The banks are doing well. And it's moving out of techs. It bodes well, right, for the health of the overall market out there in the U.S. Will look healthier and healthier if this continues?
Absolutely. It's a very, very good point, a very important point, because I do think that the market bottomed on October 12th. I do think we're in a bull market. And it was a very broad bull market at first until the banking crisis hit us in March. And that's when the market started to narrow dramatically. People started to run into the mega cap 8 stocks, figuring that they would not have to rely on banks and that they generate a lot of cash flow. And meanwhile, they ran out of financials and also energy, because the fear was that if we're going to have a bank crisis and it's going to be a bad one, then the U.S. economy would fall into recession and we get lower oil prices. Again, the bulls, like myself, were saying the market doesn't necessarily mean, the narrowing market doesn't necessarily mean that it's going to go down. It could broaden again. And I think that's what it's exactly doing, as people are getting more confidence that the financial crisis is not going to spread, that it's been pretty well contained.
So we are in a bull market. Ed, good morning. I think the bulls would love to hear that, right? Even in the Indian markets, the Nifty has sort of, seen a good growth of almost 10% from the lows that we saw in the month of March. Do you think there is more to go on the upside for emerging markets like India, or do you feel that a lot of the good news perhaps is already in the price?
Well, because we've had such a big move in the U.S. market led by basically 8 stocks, investors, I think, are starting to be concerned that they might be missing a bull market. And so they're going to be looking for good values. In the United States, I think they're going to find that the financials are good values. On a global basis, I've been keen on India. I think India is benefiting from the Cold War between the United States and China, really the Chinese and the Western world, if you really want to broaden it out. And meanwhile, the Chinese recovery from the lockdowns has been disappointing. The price of copper has been kind of weak, which suggests that the manufacturing sector in China is weak. And the consumer sector that was anticipated to be very strong coming out of the lockdowns has been somewhat disappointing. So I think we have seen that the Indian market has outperformed the Chinese markets and a lot of other emerging markets. And I think that may very well continue.
All right. Good morning, Mr. Yardeni from here in India. My question to you is, the volatility index is almost at pre-COVID levels. So it seems investors out there, they're not really concerned about the kind of rate hikes we've got, or maybe it's not had that kind of impact on the economy that was earlier thought about. Do you think it's, investors are being a little too casual about this? Because we're only looking at a blue sky scenario for now. Your take?
Right. That's a very good point. I'd much prefer to see a lot more fear and the market kind of go up a wall of worry, which is what it's really been doing. But now, because the market's done so well and the economic data has been surprisingly good for those who were anticipating a recession, we are seeing more bullishness. I like to look at the so-called bull-bear ratio that Investors Intelligence puts out, and that's running around 2.0, which is kind of neutral. When it's 1 or 0, you really want to load up on stocks, because from a contrary perspective, there's a lot of fear. It's not anywhere near 3. Once it gets to 3, I'd be more concerned that there are too many bulls. So at this point, I would say that sentiment is kind of neutral.
We got that. Ed, thanks a lot for stopping by and giving us a quick take on the markets. The Nifty, in any case, is inching towards a lifetime high. So we're almost there, but not there quite yet. I think it's just a matter of time. In the meantime, of course, we have big events like the RBI policy upon us today. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to help us with the top 10 list of stocks.